Good morning, everyone, and thank you very much for joining me. This is the Morning Market Review. It's the 26th of January. My name is Russell Shaw. I am a Senior Market Specialist at FXCM. I'm just going to go ahead and bring up our disclaimers. If you can have a read through those disclaimers, I'll keep them on screen for a few moments, and then we'll get on with the live stream. Hi, Raj. Good morning to you. Pleasure to have you on the webinar live stream as always. All right, just let me keep this high risk investment warning on for a few more seconds, just if you have a read through that. All right, let's go ahead and bring up the market commentaries disclaimer. Okay, great. All right, let's take a look at the real rate. Let's take out the bottom. Let's just take a look at the real rate. Okay, so the real rate is a key driver of the market. That's effectively the hypothesis that we are running our analysis off of. It's not the only driver. We're in the middle of earnings season. Earnings will be a driver as well. Interesting data came out yesterday. We had a really good GDP number coming out of the US. Hey, Kim, good morning to you. Thank you very much for signing into the live stream. We had a really good GDP number, came in above expectations. I think it was 3.3%. Let me just double check that. Yeah, 3.3%. The durable goods, core durable goods was also good. Core durable goods is a measure of business investment. We're expecting 0.2%, came in at 0.6% month to month. So it's good. No real signs of a hard landing, right? What's also interesting, we've had really aggressive rate hikes, and it's not really slowing down the economy. Astounding, really astounding. Hey, Indran, good morning to you. Welcome. What we're going to do is we're going to carry on looking at the US 10-year real rate. It's going to tell us, it's going to give us a lot of information over a period. But I must admit, it's quite hard to get a bead currently. I'm finding today it's quite difficult to get a bead on the direction caused by the real rate as a driver. Let's just examine that. All right. We're looking at the daily, and we saw that this is going back Wednesday. This was actually a red candle when you and I met for the live stream on Wednesday, and then it actually turned around and increased quite sharply. But then yesterday it's come down. Yesterday's candle high is the highest high in at least 3 candles. So yesterday's candle becomes the reference candle, and I want to just keep an eye on whether we get a reference candle reversal here. There's three basic requirements for a reference candle reversal. Okay, so we need the candle that's got the highest high in at least 3 candles. We've got that. We need the candle to the right to move below the reference candle's low. We've got that. Now, the third requirement is we actually need it to close below yesterday's low. We'll only know that at the end of the day. But that third condition's everything, right? So let's keep an eye on that. Typically, if the real rate comes down, so let's just put an arrow in here. If the real rate comes down, I would expect the US dollar to come down because there's a positive correlation there. The rate, the higher the rate, the more of a magnet it is for the greenback. The lower the rate, the more market participants will seek out returns elsewhere. So the idea here is, let me just see, Indran, the counter for the real rate. The counter, it's a calculation. What we're doing here, let me show you. You just take the US 10-year. That's called the nominal. And you're just going to minus what we call the break even. Okay. And that's going to give you the real rate. Just to give you an idea, does that help, Indran? Just let me know, does that help? Basically, interest rates would be nominal equals real plus inflation adjustment. So what we're doing here is we're going nominal minus inflation adjustment equals real. That's effectively what we're doing. Okay, so that's what we've done with this. So okay, so that's how we get the real rate. And effectively, what is the real rate? Let's just understand what the real rate is. Okay, what we're doing is when you get, just think about this in terms of your own savings account. When you're earning interest on your savings account, let's just say you've got $100 in a savings account, and for ease of calculation, let's say there's a 10% interest rate per annum. So at the end of the year, you're sitting with $110 in your account. So that you're 10 Rand better off. But what happens if there's a 5% inflation and prices have increased by 5%? Well, then you've only really made $5, haven't you? So that's what we're looking at. That's what the real rate. Hey, Amia, good morning to you. Now, it's a key driver. The real rate is a key driver of markets. Okay, precisely because we're looking for real rates of return. Okay, and it's intrinsically linked to how market participants look at money and profits via what we call the time value of money. Okay, so that's effectively sort of the theory behind it. But let's take a look at the US dollar here. Okay, hey KMD, welcome. All right, let's just let's put in the US dollar. Okay, here's the US dollar. We're using FXCM's US dollar basket. Let's just put that in new pane. Okay. All right, take a look what we're talking about here. This is the relationship with the real rate and the US dollar. As the real rate moves up, it's acting as a magnet. It's pulling money into the US dollar, okay, into US dollar denominated accounts, and fixed income instruments. And what's happening is when the real rate comes down, well, dollar comes down. Okay. Here it's kind of broken a bit, but on an absolute level, we're getting a move up here. And on an absolute level, you can see it's moved up here. Okay, so we've got very strong correlations. Okay. We can add in, let's put in the NASDAQ underneath this. Okay. Hey, KD. Okay, perfect. I thought it might be you, KD. I wasn't quite sure. Morning to you and welcome as always. All right, let's put in NASDAQ underneath this. NASDAQ has what we call an inverse relationship. Okay, so as we're going to move up in the real rate, okay, it actually puts pressure on the NASDAQ. NASDAQ gets pressure to the downside. As the real rate comes down, so we get a push up here. Okay, and then what's interesting here is that the time value of money just seems to have slipped up here. And what's effectively happening is that the key driver here has switched from interest rates to what we looked at yesterday. What did we look at yesterday? We looked at the Magnificent Seven. So the Magnificent Seven are all doing really well. Actually, 6 of the 7 are doing well. Tesla's not doing so well. Okay, so we're getting a push up here. Now, what I suspect is that besides the Magnificent Seven being a key driver here, I think that there will be some pressure on rates to come down. I think there's an expectation for rates to come down, which makes sense this year because inflation's looking like we're under control, right? We just, before we can really say that with any sort of certainty, we are running quite hot in the economy. That's taking a lot of pressure off of the central banks to lower rates. The central bank is not going to lower rates if the economy is running too hot, because that's feeding fuel to the fire, right? I won't do that. But we'll just keep monitoring. The idea here is, I think we've got to see some sort of decline here, and this is subject to correction. When I say I think, I don't know with any certainty, but I think we are going to see some sort of push down. And if we get a push down in the real rates, I would expect the dollar to ultimately push down. And I think that there's a tailwind for NASDAQ. I think there's a tailwind for NASDAQ, right? The idea here is in the long term, in the medium to long term, the relationship seems quite striking. Where it's getting a bit more difficult to read, is over here. Let's go get this arrow again. This is coming down, the real rate coming down, but it looks as if dollar still getting some sort of support here. So some sort of mispricing here. Something gives, and we're just going to have to let time sort this out. I would expect, again, just to reiterate, if real rates coming down, it does act as a headwind against the dollar. And I think that this resistance area here, probably is quite meaningful, considering that we've potentially got a real rate. I beg your pardon, we've got a reference candle reversal that's building here. Let's just understand what a reference candle reversal is, and then we'll move on to top-down analysis. A reference reversal would look like this. Okay, so these are candlesticks. I'm just not drawing them as candlesticks. And what we need here is 3 conditions. We need 3 conditions. We need the highest high in at least 3 candles. We need the right candle to take out the reference candle's low, and then we need it to close. So we've got 2 of 3. But the third condition's everything. Okay, the third condition's everything. All right. No doubt about it, though, the dollar is showing some strength, and we're just going to have to default to that strength at the moment, because in the short term, it looks like that's dominant. But I think that we just watch this resistance area. So what we'll do is we'll go down to the daily chart of the US dollar. We'll use the FXCM basket here, right? And we'll take a look at the dollar on a daily basis in terms of the zones. So let's just share that chart with you guys. Let's get the camera out of the way. Best to put it here. Let's leave that there. Let's push. Yeah, that's better. So where are we sitting here? Where we're sitting here is in zone 1. We're in the upper blue, upper red. So if we're in the upper blue, upper red, that's the bullish area. Okay, we have got this resistance up ahead, which I think is going to come into play soon. But in the meantime, Okay, the zone 1 looks to be holding quite comfortably. If it's, you can actually see that the bottom Bollinger is starting to pull up. Well, let's go down to the US dollar daily chart and see what's happening on the US dollar daily chart. See if there are any technical signals there, right? Sorry, I don't mean to say the daily chart. I mean to say the hourly chart. I didn't mean to confuse you guys. Let me just share this tab. This is the hourly, the US dollar hourly. And what we want to do is we want to see if the hourly chart is showing some sort of synchronicity with the daily chart. And there is a certain amount of synchronicity. Okay. There is a certain amount of synchronicity. Okay. You can see that let's make this. You can see that the exponential moving averages, the dollar exponential moving average has crossed bullishly. Take a look at the stochastic. It's hinged. It's pushing up. Well, if we make our way to the upper quintile, and that's the big question, if capital I, capital F, if we make our way up to the upper quintile, then we get angle and separation in the EMAs, then we probably get a swing here in the US dollar. Well, if the US dollar is swinging up, what can we expect from, say, the euro? Okay, so let's go through to euro. Take a look there. And we had the ECB yesterday. The ECB held its rate at 4.5%. And the market pricing in rates, I think in April, but Madame Lagarde, President Lagarde said, look, it's way too soon. And the way that the market reacted, it's actually taken the euro lower. This is euro. It's taken the euro lower. So we're in zone 3. We're in the bearish area. Okay, we're between the lower blue and the lower red. Where's the RSI? RSI is below 50. Right? So we've got this bearish outlook on the daily chart. Well, if we've got this bearish outlook on the daily chart, what's the hourly chart telling us? And can we sync it up? Can we synchronize the two time frames, daily and hourly? Let's take a look. Right. So you can see, look what's happening here. You've got the EMAs pushing down here. You've got the green 5-period EMA below the orange 10-period EMA. A good angle there, and they're starting to separate. Take a look at what's happening with the stochastic. Well, stochastic has hinged down, it's turned down. Well, if the stochastic's turned down, okay, and it makes its way to the lower quintile, then we probably got some sort of swing going there. Okay, one thing you guys can just keep your eye on is this support level here. It looks as if it's trying to break through that support, and if the stochastic makes its way to the lower quintile, then I think there is a potential swing on here. Okay, so very, very interesting. Let's just take a look at cable as well. Take a look at GBP USD. We'll start at the daily time frame, and you can see it's a different beast to euro. So let's just share it. This is cable, right? This is GBP USD. It's neutral. It's sitting right in the middle of no man's land. What's no man's land? No man's land's between the two blue. Okay, Raj, have a great weekend. I'll see you on Monday. You can see that we're sitting in no man's land. What about the RSI? It's on 50. Okay, so we'll just move over this because it's not in any trending area. It's not in any trending area. So you can see that the dollar there starting to lift, putting a little bit of pressure on euro US dollar. Let's just take a look at gold, and then we'll take a look at DAX. Let's just see if the dollar is exerting some upwards pressure. One would expect some downwards pressure on the gold price. Let's see if that is in fact the case. Okay, so we'll go through. Not quite as much pressure as I would have expected. It's tending to move sideways. There is a slight negative bias here. The RSI is below 50, but heading towards 50. So some neutrality there. So let's just draw some conclusions. I think there's some important conclusions to make here. And the conclusions are we've seen the US dollar increasing, but we've seen the US dollar increasing when the real rate's starting to come down. There is some sort of resistance on the US dollar. I think that puts a price ceiling on the US dollar. If there's a price ceiling on the US dollar, it's probably a price floor on euro. And if that's the case, well, no surprise to see that gold's just treading water. Gold's just treading water. Let's take a look at DAX. See what's happening on the DAX side of things. Okay. Again, what we'll do is we will look at it on the daily chart. A measure, a bead with the zones. I'm just zooming in here. This is going to be a little easier to see when I zoom in. We're in zone 1. We're in the upper blue band. Look at the Bollingers are starting to expand. So DAX actually starting to show some signs of life here. And something that we did mention last week, I just want to get some arrows here. Just bear with me. Okay, so you can see that the Bollingers are starting to expand. So potentially some movement, some volatility, some momentum starting to build here with the DAX. As long as we hold zone 1, which is the upper blue, upper red, that's bullish. Okay, take a look at the RSI. It's about 50. And then last week we said that just watch this. Probably a dip in the uptrend. So just trying to just get this. There we go. So just watch the support level. And the support level held beautifully. Okay. Let's just go down to the hourly here. Okay. And what we want to do is we want to synchronize the hourly with the daily. Okay. So we go down to the hourly chart and we'll just pick up. And what do we have here? Now, this is interesting. What we want effectively, because we are in zone 1 on the daily chart, we want there to be a bullish cross with the EMA. So we want the green 5-hour EMA to cross above the orange 10-hour EMA. And what we would need is we would need the stochastic to turn up as well. So we would need the two things to happen. We would need the stochastic to turn up. And not only would we need the stochastic to turn up, we would need it to go into the upper quintile and hold. And once that happens, then there's potentially a swing going on with the DAX. And if there's a swing going on with the DAX, on the hourly, it's lined up and synchronized quite nicely with the daily chart. Just one last point to make. There is some sort of break, some sort of dichotomy between real rate and dollar at the moment. Just keep that in mind. It's much easier to trade when they're in flow. The fact is they are diverging at the moment. I think that's going to create some difficulties. All right, that's where we're going to go for this morning. If there are any questions, please go ahead and type those in. I'm just going to wait a few seconds, see if there's any questions here. Any questions, please go type those in. Okay. I don't see anything coming in, so we can wrap up here. Let's wrap up here. And I want to wish everyone a good weekend and chat with you guys on Monday morning. Thanks very much all, and keep well. Bye now.